Professional colleagues and my dear friend. ICAI Swarupa Vazalwar, Managing Committee Member, Nagpur Branch, heartily welcome you all to another yet interesting and insightful session organized by Nagpur Branch of ICAI, Intricacies of Search and Seizure Proceedings. Friends, we all are aware of the terms search and seizure. However, not many really know the intricacies of it, such as who can authorize the proceedings, who can conduct the search, do's and don'ts during the search. In other words, power of authorized officers, execution of authorization, so on and so forth. Now, with so much of digitalization of financial data, recent changes as well as updation in reporting and reports generation, cross integration of the financial data between various financial institutions and tax authorities, it has become of very much importance to understand this topic thoroughly from the experts. So for today's session, we have with us Honorable CA Makarand Joshi sir, past chairperson Nagpur branch, as well as our chief guest. The excellent faculties with us being CA Bhuta from Mumbai and CA Sneha Padhiar ma'am from Mumbai. So please.
Thank you so much, Swarupa. Chief guest of today's session, CA Makarand Joshi sir. He actually happens to be the past vice chairman of WIRC as well as past chairman of the Nagpur branch. An eminent pillar of this particular branch because whenever we need him, he is just a call away. So welcome you, sir, and thank you so much for being the chief guest of today's session. A very important one, VCM on intricacies of search and seizure. We have two eminent personalities as speakers, the young and very dynamic CA Bhuta ji and CA Sneha Padhiar ji from Mumbai. Thank you so much, both of you, for gracing this occasion and being a speaker. I welcome you both. Managing Committee members of the Nagpur branch, including RCM CA Abhijit Kelkar ji in absentia, CA Swarupa Vazalwar, CA Deepak Jetwani, CA Trupti Bhattad, CA Sanjay C. Agarwal, CA Dinesh Rathi, the treasurer in absentia, and CA Sanjay M. Agarwal, vice chairperson, and CF Segulane, secretary. So all the team of Nagpur branch, the team is really big. We have 9 members now. So welcome you all. And along with that, I welcome all the members who have connected to this VCM. I guess the numbers are a little less as of now, but I hope that people will be joining very soon. So I welcome all of you on this forum of Nagpur branch and in this particular VCM, which is on search and seizure. As I stated that we have very dynamic speakers in the form of CA Bhuta ji and CA Sneha Padhiar ji. And as we all know that search and seizure nowadays is something which most of us witness when we are practicing in taxation. And we need to understand the intricacies of how to handle it. So the basic purpose of having this session is to actually make members aware and all those members who are practicing these days in taxation, because there are a lot many new members who have joined the fraternity and they are now practicing, and they need to understand in this digital era as to how we have to proceed with search and seizure, with everything now getting digital, and we have to submit every document on a digital mode. So this is very important, and that is the reason we are having this particular session in this direct taxation series. And I hope that this session will be providing a lot of insights to everyone and we'll be having a very good learning out of it. So thank you one and all. And on the future front, we have not many programs planned up. Like tomorrow, we'll be having a session on IBC, which is a 4th session, the concluding one in the IBC series on liquidation. We also have tomorrow important meeting on CRET. CRET, that is a proposed scheme of education and training for new chartered account CA students. So we have actually a discussion meet tomorrow evening at the branch. And I request all the members of the Nagpur branch to please grace the Nagpur branch tomorrow. This is a personal meeting happening tomorrow. So your feedback should be taken care of. We need to have your feedbacks because 30th June is the last date of submitting all the feedbacks in this particular case. And I request each and every member to please be a part of this particular discussion meet tomorrow. There are a lot many programs that will be coming up in the later stages, that is next week. So we'll be sharing with you all the updates. and I hope you'll be joining with the Nagpur branch in the efforts of the Nagpur branch, and will be enjoying all these sessions. Thank you, one and all. With this, I again hand it over to Swarupa. Over to you, Swarupa.
Thank you very much, sir. Friends, now may I first, basically, sir has already told you the very basic idea about organizing this session. Now, I request my managing committee member Sanjay C. Agrawal to introduce our chief guest for the session, CA Makarand Joshi, sir, who, as sir has rightly said, has not only been the past chairperson of Nagpur branch, but has also been the vice chairman of WIRC, and he has always been very helpful and very supportive, as well as figure. So now I request CA Sanjay C. Agrawal to introduce our chief guest for the session to the audience. Sanjay, are you there?
Yeah. Just 2 seconds. I'm parking my car. Actually, I'm driving. Sorry, huh? Just a second. Yes. I'm audible? Am I audible?
Yes.
Yes, no?
Yes, very much.
Yeah. So, sorry for the delay. First, very good afternoon, sir, and very good afternoon, everyone. I feel honored to introduce our chief guest, Mr. Makarand Joshi, sir. Makarand Joshi, sir, is BCom FCA. He's a partner in Joshi and Company. He is elected to Nagpur branch in 1994 and became chairman for the year 1998 to 1999. Further, he was elected to the WIRC in the year 2003. He was also the treasurer of WIRC for 2 terms, that is 2004 and 5 and 2005-6. In the year 2007, he was again elected to the regional council. For the 3rd time, he was elected for the regional council in 2010 and was the vice chairman of the council for the term 2010-11. It is a notable thing that he is the only person from Nagpur city to hold various posts in regional council for 3 years. He served many standing and non-standing committee of the regional council. He has delivered lectures on the topic of cooperative society, taxation, and bank branch audit throughout the western region. Also, he acted as the chairman of technical session in various conferences, etc. He was also the president of the Rotary Club of Nagpur for the year 2000-2001 and Leo Club for the year 1983. Achievement lists are so more that I cannot cover it within 5 minutes. So let's welcome CA Makarand Joshi, sir, with thunder of applause. Thank you.
Thank you, Sanjay. Welcome, Makarand, sir. Sir, may I now request you to address the virtual gathering, please?
Hello, am I audible?
Can
Yes, sir.
you be
Very
a
much
bit
audible.
louder, maybe?
Very much audible.
1 minute. Is it okay now? The voice?
Yes, sir. Now it's okay.
It's okay. There is no issues. Thank you, Chairman of Nagpur branch, CA Jiten Saglani, for a very good introduction. Sanjay C. Agrawal. We have 2 Sanjay Agrawal. Hence we say Sanjay Mohanlal and Sanjay C. Agrawal. Or rather Sanjay Itwari Agrawal and Sanjay Kamti Agrawal. we can say. Thank you, Sanjay.
Thank you.
Thanks a lot to Nagpur branch under the able leadership of Jiten Saglani, the Navratna of Nagpur branch. We are having ladies and youngsters and all that whatnot. We have a dashing and great, you can say, members. Where rather I have seen when being across the India for the seminars and conferences. But a branch like this, you cannot find anywhere. A great branch. So it's a good thing, Jiten, chairman, and the person organizing the VCM. Really, the search and seizure topic is a complicated one. It needs to be elaborately studied, delegated, and you can say studied. Otherwise, a little bit of complication may lead to a heavy and huge taxation or otherwise putting oneself in a trouble. So it is always better to have a thorough knowledge, at least a good working knowledge, and then we can go afterwards, go to the experts. The two speakers, as far as I technically, I don't know Sneha, but and also not, I don't know Harsh, but I definitely know Shailesh Bhai, his father, from last many years, a very, very studied person. So that means he is under very good hand with Shailesh Bhai. So he must be a learned man, and definitely he will guide all of us in a great way, and will give a good knowledge, good intricacies, and whatever we require while dealing with any search or any seizure, whatever may be. Friends, search and seizure, as it is said, अपने आम भाषा में अरे रेड हो गई, it's okay, but ये till 1922 it was not there. After the World War, it started. The need was felt that there should be some mechanism to unearth the money which has been not taxed or some evasion has been made. And then right from after that World War II, the procedure started of search and seizure. What has happened during the last so many years? There is a transformation because of the many, you can say, cases and all that, of the judgments of high courts and supreme courts. The department felt need to make the make the section more powerful tool to be taken, so that any unearthed money can be found out, it should be taxed and be properly put into. There are many, you can say, duties of the persons who are coming to your places, your rights also, your duties also of the assessee. So friends, there are many things which will be dealt by both the learned speakers who are from Mumbai, and they will be a helpful or resource person for all of us. So Jiten Bhai, Chairman of the Nagpur branch, wish you all the best, and all the best to VCM, and a good luck to you. Thank you.
Thank you very much, Makarand sir, for your insightful words. Now, taking the session further, may I now request CA Deepak Jetwani, Vikasa Chairperson, Nagpur branch, to introduce our fourth speaker for the session, CA Harsh Bhuta sir. Over to you, Deepak. Deepak? Deepak? Are you available? Am I audible to you, Deepak? Please. I guess there are some technical glitches.
Audible? Yeah. Good evening, everyone. Sarupa, am I audible?
Yes, you are.
Yeah. Thank you, Sarupa. Good evening, everyone present here. I am glad to introduce to you all our speaker of this session, CA Harsh Bhuta ji. Harsh is a partner at Bhuta Shah & Company LLP. He leads the transaction advisory and income tax practice of the firm. He is also the chairman of the 10th largest accounting association in the world, that is Morrison Global Asia Pacific region. Harsh is a qualified chartered accountant and an all India rank holder. He holds a Bachelor of Law degree from Mumbai University. He is also a CFA charter holder from the CFA Institute, USA. He is certified as a registered valuer under the Insolvency and Bankruptcy Board of India. Started his career in 2008 in the audit practice at the PricewaterhouseCoopers, PwC, and subsequently Harsh was integral part of the transaction advisory practice at E&Y. in India. He joined Bhuta and Company LLP in 2015 and has since then advised a number of private equity investors, multinational companies, high net worth individuals, and limited companies with their transaction tax advisory matters. His areas of expertise includes the following: search and seizure, transaction tax advisory, merger and acquisitions, due diligence, representation with the Indian revenue authorities, international tax advisory, insolvency and bankruptcy law. So friends, join your hands and welcome CA Harsh Bhuta ji. Thank you.
Thank you, Deepak. And I welcome you, Harsh sir, on behalf of India Nagpur branch of ICAI to the forum. May I now request my NCM, CA Tripti Bhatta, to introduce our another eminent faculty for today, CA Sneha Padhiar ma'am.
Thank you so much, Swarupa ma'am. Yeah, audible?
Yes, you are.
Thank you so much, Swarupa ma'am. It's my pleasure to introduce Sneha Padhiar ma'am, who is a partner at Bhuta and Company LLP. She has done her graduation with Narsi Munji College of Commerce and Ethics, Mumbai, and also pursued her LLB. Sneha's core expertise is handling search and seizure assignment, including representation for tax litigation matters arising out of search and survey action before Income Tax Appellate Tribunal and CIT appeals. If I start briefing down each and everything, so I guess it will take another 15-20 minutes. So in looking at the today's topic, I guess she is the apt speaker. So I'll request each and everyone to please join your hands together and please welcome Sneha Padhiar ma'am.
Welcome, ma'am.
Thank you so much.
Now I can see that, the time is just right. We are having more and more participants joining us without taking much of the time for the speakers to start giving their deliberation. I now request CA Harsh sir to please take the proceedings forward and start with your deliberation, sir.
Thank you. Thank you for that, Swarupa. So good evening, ladies and gentlemen. Chairman of Nagpur branch, Jitenji Saglani-ji, Makarand-ji, for your very, very kind words. And, I want to thank the Nagpur branch for, it is my honor to be speaking to you all today for this session, which is organized by the Nagpur branch. Today, my partner, Sneha, and I will be delving into the intricacies of search and seizure. I think, Makarand-ji rightly put it that, it started from the 1922 Act, these proceedings. They have evolved, over the last 100 years. I think the primary motive, of the government to come up with these search and seizure and survey proceedings, because this is the most powerful tool which is in the armory of the income tax department. And the primary motive is deterrence, deterrence of any unaccounted activities, deterrence of, dealing in cash, deterrence, of doing anything which is against the code of tax policy. So I think that was the motive, and to a large extent, I would say that the income tax department has been successful. There have been huge actions where a huge amount of cash is found. But of late, the trend is it's not too much cash which is found, but it's basically incriminating material which is seized or impounded, depending on whether it's a search or a survey. And it's increasingly that the message is coming across to all the taxpayers that it does not make sense to run a parallel economy, to run a parallel business in black, get regular in the mainstream and deal with only accounted transactions, because this kind of fear could always be there where the income tax authorities could come and conduct such an action. In terms of significant changes in search proceedings, I think we are going to cover this, within this presentation. I am going to be starting with, how a search action is conducted, intricacies of that, and how, the entire procedure is laid down and what actually happens, kind of behind the scenes. And then my colleague Sneha will get into the assessment proceedings and also some of the other acts which come in, like Black Money Act and Benami Property Act. So I would say last couple of years have been very significant in terms of changes in these search and seizure proceedings. One huge blow to taxpayers was, particularly in regard to search and seizure proceedings, is that the Income Tax Settlement Commission was abolished as on 1st February 2021 in the budget. So the Settlement Commission, most of the cases which were going to the Settlement Commission were cases of search and survey actions because of the kind of incriminating material which was found and the huge penal consequences. That's why it was a good measure for the taxpayer also to get certainty into the matter and pay tax and go to the commission, and for the department also to get tax upfront and not litigate over 10, 15, 20 years. But with that being abolished, now there is no other mechanism for a taxpayer. After a search action is conducted, they will have to go through the regular assessment and appellate proceedings for any relief to be sought. Secondly, over the last 3-4 years, there have been significant changes and I would say increases in terms of penalty provisions and rates. We'll get into that in detail later on in the presentation. Basically, the penal provisions have become so stringent and prohibitive that it becomes extremely difficult for any assessee to come out of it, in terms of when you compare it to the value of the transactions. And also the assessment, block assessment concept has also now been abolished. Now it all comes under Section 148 of the Act, and it will all be under the reopening procedure. Obviously, there will be some modification to the procedure, etc., which we will get into later on during the presentation. So now, we'll start with what is search and seizure and what is survey. And basically, I think that this is the question which comes up a lot, that what is the difference between a survey and a search? To put it very simply, search is a more stringent action. Survey is a bit less so. And we'll also see how a survey can be converted into a search. But broadly, survey is basically means that the income tax officers come to your office premises. They cannot enter your residential premises. So they come to your office premises to scrutinize or inspect. Now, the department basically which can do this is either the Directorate of Investigation, whose power is to basically do a search or a survey, or the assessment unit. The assessment unit has the power only to do a survey. They cannot do a search. And to ensure proper payment of advance tax, self-assessment tax, and any arrears, the assessment unit and the tax recovery officer can basically do a recovery survey. I think what's important to understand in this is that survey can be only done during business premises. So basically it is after sunrise and before sunset, they can enter your premises. That is not the case when there is a search. They can come at any point of time. It cannot be at your residential premises unless your residential premises is listed as your business premises. So there are cases where basically the particular assessee is either operating from home or within the same compound has the residential and office premises at the same address. So then, yes, they can enter the residential premises because effectively your books of accounts are kept there. Another very important point to note is that there cannot be any seizure of books of accounts. It is an impounding which takes place, and there is a certain time limit in terms of them returning the impounded material back to the assessee. So broadly, that is the difference between search and survey, and we'll just get into some more specifics as to what is and what are the powers of an authorized officer under Section 133A of the Income Tax Act. So one is that he or she can place marks of identification on the books of accounts. He can make extracts or copies, and an inspector is also considered as an income tax authority for this purpose. The officer can impound and retain in his custody. He needs an approval, from his superior officer, but he can impound and retain in his custody any books of accounts or documents inspected by him, which he believes are incriminating in nature. And he can make an inventory of cash, stock, or any valuable article or thing which is checked or verified by him. He cannot seize it. He can just make an inventory and he has to give it back. Yes, he can also record the statement of any person which he may believe is useful or relevant to any proceedings under this act. I think a couple of other points I want to highlight is that how do you convert survey to search? I think so from the investigation wing's perspective, survey is conducted by the investigation wing, which is usually the case. Then the concerned officer will need to obtain necessary search warrant from the PDIT, basically who's the principal director of investigation. And after preparing a satisfaction note, which is a prerequisite for authorization of search. And it's possible, but very, very rare, that if a survey is conducted by an assessment unit, then a satisfaction note is to be prepared by the jurisdictional joint commissioner or additional commissioner in consultation with the jurisdictional commissioner of income tax, and then sent to the PDIT investigation for a warrant of authorization. So practically, I have never seen it happening that assessment unit converts a survey to a search. But yes, oftentimes survey is conducted into a search when the investigation wing conducts a survey. Either they find a considerable amount of cash. So there is a CBDT circular 414 of 30th September 2014, which clearly says that in the course of survey, if considerable amount of cash is found, it can be converted to survey. There are certain internal guidelines also for the amount of monetary, amount of cash which is found, and then when it should be converted to a search. There have also been various courts which have upheld the contention that the conversion of survey proceedings into search is absolutely valid. There should be a satisfaction note to that effect, which shows that why it was converted to a search. But there are several decisions, court judgments, which have upheld this. Now we just understand broadly what is search. Search operations are exploratory exercises conducted by the director of investigation. This is on the basis of information either it possesses or it gathers this information, and then to find hidden income in the case of taxpayers who have not disclosed their true financial state of affairs. Seizure means taking possession of those assets. So basically, they take possession of the assets, accounts, documents, papers, etc., which may contain any incriminating income. And as I said earlier, this is the most powerful weapon of the income tax department to unearth concealed income or valuables and mitigate generation of black money and create a deterrent impact. So now let's look at the provisions of section 132(1) of the income tax, which relate to the search proceedings. So the income tax authorities, based on information in their possession, should have a reason to believe that any person, corporate, business group, etc., and now they need to fulfill these conditions, that to whom summons are issued to produce or cause to be produced any books of accounts or other documents, has omitted or failed to produce or cause to be produced such documents or books of accounts, or will not or would not produce or cause to be produced such documents. And these documents basically would be anything which is useful or relevant to any proceedings under this act. And the condition C is basically they have a reason to believe that such person is in possession of any money, bullion, jewelry, or other valuable article or thing which has not been disclosed or would not be disclosed. So it's quite, I would say it's a very open definition, and basically they need to have a reason to believe that there could be any unaccounted income, expenditure, jewelry, cash, which they believe this person possesses, and that's how they can get a warrant for the search. Now, practically, what also happens is that how are the cases? This is the question which comes up a lot: that how are cases actually prepared by the income tax department? So, one is that it's information based. So there is basically tax evasion petitions which are filed by people who could be, say, professional informers. They could be business rivals of competition, could be disgruntled employees, family members, relatives, and or it could be information collected during a survey proceedings. So one is that it could be information based, and one it could be intelligence based. Now, intelligence based is basically they have information from now, most of the portals of the other regulators, like the GST portal, the ICAI portal of customs, various other laws, right? And now most of the systems are talking to each other. So they get a lot of information and intelligence through these portals. They do their own analysis. So the investigation wing officers would do analysis into TDS returns, GST returns, financial books, books of accounts. Also, with GST authorities, usually would share a list of bogus parties, who regularly give bills which are not genuine. That is another way. Shell company lists, you see a lot of there is a separate unit within the investigation wing called FAIU, which is Foreign Asset Investigation Unit. They get a lot of information from information sharing, which is happening across countries, and even the recent WikiLeaks, Pandora leaks. So I think all this information is kind of coming into the system, and the assessing officer, or rather investigation wing officer, would prepare a case based on a lot of this information. And I think this is some of the ways they build up a case. Of late, I would say that in earlier days, when the technology was not so robust and there was not so much information sharing, cases were more information based, but now most of the cases are intelligence based. When they conduct a search, usually they have very, very credible information available with them, which kind of ensures that the search action is successful before they even come to the premises. So yes, and yes, so the authorization of search is by issuing a search warrant. Search warrants will be shown to the assessee at the time of entry. So usually what happens is that search teams are formed. This is for each premises, there will be one team. There will be one leader of that team, which is usually Deputy Director of Investigation rank officer. These are called search parties, and the date of search and strike time is fixed it is usually the case that other than the conducting DDIT and the conducting additional DIT, the other search parties members don't even know where they are striking. They would be told that you have to meet at these at so and so place, and then simultaneously they would basically strike at all the premises of the assessee. And many a times nowadays you're seeing search actions which have 30, 40, 50, 60 premises across states. So it is a pretty Herculean task to coordinate, because for them secrecy and confidentiality is the most crucial thing in this action, because if it is leaked somewhere that this particular taxpayer is going to be searched, then he will end up ensuring that they may not find any incriminating material. So it's very, very important, and that's how they kind of control it. They call for manpower from different directorates of investigation, and they set up a control room and monitor all the search action premises throughout the course of the search. Usually, I would say an average between 3 to 5 days is what search action goes on for. One very important thing, I think, which people don't realize, is that this is a huge coordination of manpower. It also entails a lot of cost for the income tax department, and that's why it is there are certain minimum criteria which are set up by each director of investigation in each region of India in terms of what kind of action they would want to do. So they would, although they may know, for example, that there is a certain taxpayer who has undisclosed income, but if it is below a certain value, they may not it may not make financial sense for them to strike at that premises because of the amount of cost involved and manpower required for each operation. So obviously this is different for each region. A metro city like Mumbai would have a higher threshold. A smaller city, tier 2, tier 3 cities would have a lower threshold. And because the idea is that it is not only about the tax collection, it's about creating a deterrence and ensuring that taxpayers realize that this can happen to them, and they should basically not indulge in any unaccounted transactions. So basically, search is normally authorized by the principal director of investigation, and he requires a prior administrative approval of the Director General of Income Tax Investigation, but it is issued by the PDIT. Subsequently, obviously, because what happens is that when the action starts, it would be very difficult administratively to go and take a warrant again from the PDIT. So the additional or the joint director of investigation has been given the powers to issue new warrants after the action has started. And so basically there is no need to go back to the PDIT for covering new premises during the course of the action. Now, what are the powers of the authorized officer? So basically, he can enter and search any building, place, vehicle, aircraft. There is no requirement for him to enter at any particular point of time. He can enter any time. Basically, there is a surveillance process also usually which goes on for premises. So if they believe that even say late in the night there could be some unaccounted transactions happening or cash coming in, going out, they could strike at that point of time. They can break open any lock, door, box, locker, safe, etc. Usually they will always do the search action along with help of the police, so that if they get any resistance at the premises, they will have their support. And they can search any person who has gotten out or is about to get into the premises, and they can seize any books of accounts, documents, money, bullion, jewelry, and they can place marks of identification and make a note or inquiry. I think just one thing I would like to add also on this is that they cannot seize, however valuable it may be, any stock in trade. So if it's a stock in trade, say the business of the assessees into jewelry, it may be unaccounted jewelry, but because it is part of the business and stock in trade, they cannot seize it. Now, what happens when cash is found at the premises? So what is usually done is that very quickly the books of accounts are pulled up of the particular assessee, and if it is reconciled, absolutely no issue, cash is given back to the assessee. If it is not reconciled, then whatever is in excess of whatever is shown in the books of accounts, that excess is seized. Now there are questions also. Disha, if you can move to the next slide. On jewelry. So when basically the search team is at the residential premises, usually there will be jewelry which is found. Now similar question happens, and what happens and how do you reconcile it? So I think one thing which we found very helpful is that if you have been filing wealth tax returns, and if those jewelry is declared in the wealth tax return, because see, you may have bills for recent jewelry, but many a times you see that very old jewelry which basically could be ancestral jewelry which would be so old that there would not be any bills available. But what would be very helpful is if it is declared in the wealth tax return, then there is no issue, and that can be used as an evidence that this is accounted jewelry. Obviously, if it is in excess, I think the presentation has stopped. Disha, you need to do that. So if the jewelry is in excess of whatever has been declared in the wealth tax return, then that would have to that would be basically seized by the authorities. I think one very important here is that, and this is something which many assessees use during the search proceedings, that basically if jewelry is found, let's say they are not assessed to wealth tax, then what happens? And there is a CBDT circular to the effect which allows that certain amount of gold jewelry and gold items which are found in excess up to 500 grams for a married lady, for an unmarried lady up to 250 grams, and for male members in the family up to 100 grams. So this much is still allowed to be, and this much will not be seized. You will still have to give an explanation for it if it is unaccounted, but at least it will not be seized. So that is something which the CBDT circular 1916 dated 1994, and that at least gives some consolation to a lot of family members, because there could be jewelry which could be very old. So at least this much buffer they would have. Again, this is only for gold. This would not be applicable for diamond. Silver is usually not seized because of the weight involved. So basically, usually back to the assessee. I think now I will just come to a few slides on what is deemed or constructive seizure and what is a prohibitory order. So basically, when it is not possible or practical to take physical possession or seize this item and remove it to a safe place, like for example in silver, because the weight is so high, and the income tax department would probably not have the means to transport it and then store it at a safe place. So then it is basically a deemed seizure. So although it's given back, but effectively it's a deemed or a constructive seizure. Secondly, what happens is that, and this happens particularly for certain books of accounts, is that sometimes it is just not possible or practical to seize all the books of accounts for whatever reason. It sometimes may not be possible to take all the books of accounts. So there is usually a prohibitory order which is done. Basically, effectively, it can be even a cupboard in the office or in the residential premises, and there is a seal which is put onto it, and then the documents are put there. Sometimes there's jewelry also which could not be seized, so it is put in the prohibitory order, and this will be sealed till the PO is lifted, and the prohibitory order compulsorily has to be that PO has to be opened up within 60 days from the date of the order. So within 60 days, it has to be opened up, and then there could be a seizure at that point of time, or it could be returned back to the assessee. So what are these examples? We just put in some examples here of actual seizure: cash, jewelry, share certificates, which are unlisted, loose papers, digital data. So all these things can be seized. What cannot be seized is basically heavy machinery and certain items which are basically not items of a nature because of volume, weight, or they are dangerous to be carried around. Then they are not seized, and it's a deemed or a constructive seizure. And as I said, prohibitory orders could be the bank lockers, it could be cupboards at home, etc. Now I'll move on to a very important section, I think, which is digital data. This is where all the recent searches which we have seen, most of the incriminating material comes in from digital data. Now what all does it include? You could backup of pen drives, backup of hard disks, backup of cloud data. Now cloud data is the most dangerous thing right now, where most people don't even know that there is an auto backup which is happening of their phones or of the computer. They may believe that they've deleted that data, but it's still there on the cloud, and that's something which there is a lot of incriminating material which is coming up in that. Also, backup of hard disk of laptops. I think this is also something where not many people are aware that that the income tax authorities can retrieve deleted files, deleted information, because it still stays on the RAM of the hard disk. So even if you deleted it, as long as the same hard disk is there on your laptop or computer, there are tools to delete it. And the income tax authorities, investigation wing authorities have very smart and competent technology professionals in place. It's completely outsourced, where these professionals would come in and do the backup and retrieve information which is lost in a very, very short period of time. So this is something which we are seeing over the last 4 or 5 years, particularly because of WhatsApp, which is used so prevalently, and there are a lot of incriminating chats or data which is found there. Yeah. So moving on, what are some of the presumptions in course of the search proceedings? So if a search is initiated against Mr. A, Disha, can you go back, please? Yeah. During that search, if anything is found in the possession or control of so-and-so person, then it will be presumed that such document belongs to that person. The contents of such document are true, and the signature and every part of such document which is in the handwriting of such so-and-so person is in that person's handwriting. So, section 292C and 132(4)A create that presumption. Now, this is very important because, there have been a lot of litigation around this where there would be an assessee who would say that no, this document doesn't belong to me at all, and you cannot construe that any unaccounted information written on it is something which relates to me. But as I said, there is a deemed presumption in this case, and there are many decisions. I think we've cited a few decisions. I'll just take a few minutes and take you all through some of the decisions. So this is a Gujarat, the first one, Hiren Vasantlal Shah, 19 taxman.com 241 is a Gujarat High Court decision. In this case, certain documents were found. One of these documents contained interest working. So it was written that there was a 3 lakh rupees of interest, which was paid at the rate of 3%. And the assessee said that no, these papers are found from my father's drawer, and he must be aware of it. I am not aware of it. It doesn't belong to me. And the assessing officer rejected this contention. This was upheld by the High Court of Gujarat, where it clearly observed that the assessee is in the business of financing. He does check discounting, gives loan on security of checks, and it is clearly indicated that the paper, that there is a interest working from so and so date to so and so date. When this kind of information is available, there is no other information which the department needs to create this presumption. There is a deemed presumption that this document belongs to the assessee, and he will need to explain it. If he cannot explain it due to any reason, it will be taxed in his hands. Obviously, there are decisions in the assessee's favor as well. If you see the second decision, Srimati Harmohinder Kaur, this is a Jalandhar tribunal decision, and there, a diary was found in the search premises. This diary was not belonging to the assessee; it was belonging to a third party, and it had notings which clearly said that the sale consideration for so and so property was 1.15 crores, while the agreement value was only 29.5 lakhs. So the AO made a presumption that the difference is cash, and the tribunal deleted this addition and said that this was not in the handwriting of the assessee. The diary did not belong to the assessee, and most importantly, there was no corroborative evidence found by the assessing officer which proved that this transaction was of the assessee. I think what is important here, I think the third is the Bombay High Court decision. Also similar facts, where it was ruled in the favor of the assessee, where the assessee has purchased certain shops from developers and additions were made to that effect. But the documents which showed the payments did not have many details. And basically, there was no inquiry or corroboration done by the investigation wing officer or the assessing officer, so it was deleted. So there could be ways where you could disprove it if it is not in your handwriting, if it is clearly shown that it does not belong to you. But in most cases, if a document is found at your premises, because of the presumption which is created under Section 292C and Section 132(4)(a), it would be presumed that this document belonged to you, and also that the contents are true. Yeah. So finally, I will just conclude on this. Then after that, I will let my colleague take over. Basically, a panchnama is a document which is basically contains the name and address of the person searched. It is recorded at the conclusion of the search proceedings, and it is accompanied by annexures which contain the details of so and so assets found, and also the papers which are seized. And every person who is searched is entitled to obtain a copy of the Panchnama at the end of conclusion of the proceedings. Similarly, statements which are recorded during the course of the search are quasi-judicial proceedings, and they have clear evidentiary value. They are binding on that person. Now, there are many decisions, which talk about the evidentiary value of statements, because most times you see that the retraction statements are filed by the people who have given statements, which basically admit that there are certain unaccounted transactions which have taken place. Many decisions have come, tribunals, high courts, for and against, the assessee and the revenue. But I think one important decision I want to just highlight, because it's a very recent decision, 2022 decision of the Kerala High Court of Nair Patel versus ACIT 137 taxman.com 149. This decision was very important because, and this is being cited also very regularly nowadays in the tribunals and the high courts in matters such as these, because the Kerala High Court has made very clear observations. Now, what are they? I mean, the facts of the case is that there was a search conducted on 22nd June 1998. The assessee, confirmed the correctness of the disclosure in his statement recorded on the date of the search, which is 22nd June 1998, and then further in his subsequent statement also confirmed the correctness of his earlier disclosure, which was taken. The other statements were taken in the period of 10 to 15 days from the first day, which was 22nd June 98. Then he said that basically after 13 months, he received the copy of his statement, and the day after he received the copy of his statement, he filed a retraction. So Kerala High Court ruled against the assessee and in favor of the revenue. And some of the observations of the court are very interesting. One is that why did the assessee wait for 13 months to retract a statement? Obviously, the assessee's contention was that I had not got the statement and I got it only after 13 months. But the observation of the court was that he obviously knew what were the contents of his statement. So why did he need to wait for 13 months? Further, and this is more important, one is about the time lag, but also one very important part is that you will need to, it cannot be a simple retraction. It has to have a clear reason why you said something at one point of time and now why are you retracting that statement. And there has to be evidences which you should be able to adduce, which show that these supporting evidences substantiate the claim. And due to this, the High Court ruled that the retraction statement should be ignored, and whatever the original statements are final, and the addition was confirmed. So I think a retraction is one point which is often debated, and people feel that filing a retraction is good enough, but it's important to file a retraction which is very clearly showing why the retraction is being filed. You should file it as fast as possible in case you've given a statement which is something which you don't agree to. So yeah, that's broadly the search proceeding process. Now my colleague Sneha will delve into other aspects such as Black Money Act and Benami Property Act, which are also issues which come up during search proceedings or during search assessments. And then she will delve into other aspects like search assessments, penalty procedures, etc. So I'll hand over to Sneha, please.
Thank you, Harsh. So Harsh has just explained us the entire procedure that happens on the search day during the search action. Now we will have a look at what happened after the search action is concluded. So of late we have come across that, income tax department now shares the details with other departments as well. There are two laws which are, very regularly looked upon by income tax department nowadays in the search. One is Benami and second is Black Money Act. Now, what happens, during the course of search, when seized materials are found, seized materials are usually in form of loose papers or diaries. We have come across diaries wherein, employees maintain day-to-day cash records because they need to report it to their senior authorities. So there is a day-to-day recording of cash. There are parallel cash tallies. So what happened when income tax department looks into this data? Many a time they come across transactions wherein for certain properties, so person search would have made the payment, shown that property to be belonging to that assessee in the parallel books. However, when the actual ownership of the property is looked into through the records of registrar, it appears to be in name of some other person. So all this kind of transactions where actual consideration is paid by person X and property is registered in name of person Y, this kind of transactions income tax department refers for Benami transactions. So since 2018, all the investigation unit has their own Benami prohibition units attached to them. So all this kind of transactions, once investigation officer is clear that this transaction needs to be looked into from this angle, that details are being transferred to Benami prohibition unit, and Benami units investigate further on this kind of transactions. Benami unit also provisionally attach such property when they feel that doing so is necessary while scrutinizing the entire transaction. So when we look at the Benami Transaction Act, so Benami Transaction Prohibition Act was very much there since 1988. But that time there were only 9 sections to the act. The act was not that powerful and the act was not very commonly used. But this act got amended in 2016, wherein the act was drawn down in detail. Now this act has 72 sections after amendment, and a detailed act has been drawn, which is being referred now by the investigation officers. So if one has to look at what are the Benami property transactions, so there are these 4 types of transaction which majorly falls into this Benami property. Type 1 transaction, when we look at it, is that a property is held to be, or the owner of the property is Mr. X when the consideration has been paid by Mr. Y. So in this case, Mr. X becomes the Benamidar of the property and Mr. B is the beneficial owner of the property. And Mr. X confirmed to be holding this property for the immediate or future benefit of Mr. Y. So this kind of transaction falls in type 1 kind of transaction. Then the other transaction is when the property is held in name of a person who is a fictitious person. That person is not existing. This type of transactions are also covered under this Benami Act. Third type of transaction is where the person who is holding the property denies the ownership or is not aware of the transaction at all. In that case also, this transaction will be considered to be a Benami transaction. And fourth part is when the person who has made the payment for the property is a fictitious person, is not traceable. So if you see the scope, all kind of transaction where the holder and the person making payment are different are covered in the Benami Properties Act. Now, if we look at what is the implication of, this is one example which we have just put in, where if one can see that Mr. X is making payment of 50 crore to Mr. B for a property, say in Bombay, and he is registering this property in name of Mr. C. So in case of proceeding, if Mr. C denies the ownership of the property which is in Bombay, or he accepts the fact that this property he is owning for the benefit of Mr. X, then that property which is held by Mr. A in Bombay in name of Mr. C will be a Benami property of Mr. A and which will be liable for attachment under the provisions of Benami Act. If we look at to the implications of Benami Act, then all the Benami properties which are in the proceedings concluded to be Benami properties will be confiscated by central government. There will be no consideration paid for these properties to either the beneficial holder or the Benamidar. Neither the Benamidar nor the beneficial holder will have any claim or will have any right to sue for this property. If in this process, this property is transferred by the Benamidar to the beneficial holder, that transaction will be considered to be null and void. Now, there are also, these transactions are also liable to prosecution if they are of any of the three types, which are that this transaction are being entered into to defeat any provision of law. For example, a lot of state has this kind of rules that only farmers can hold agricultural land. So if a non-farmer buys a property in name of a farmer, and if this kind of transaction has been done to defeat the law, then it will be a Benami transaction. And such kind of Benami transaction over and above confiscation is liable for prosecution and fines. Then if the transaction has been carried out to avoid any statutory dues or to defraud any creditor, if it falls in any of these three categories, then there will be an imprisonment which will be not less than 1 year and maximum to 7 years. This transaction also attracts fine, which is 25% of the fair market value. Over and above Benami Act, then we see Black Money Act. Black Money Act, as the name suggests, is basically to find out foreign assets and foreign income of any taxpayer. So now we see a lot of taxpayers who, take their money outside India, make investments outside India, and they don't disclose or do not offer tax on such investments in India. Then all such transaction, any noting pertaining to this kind of transaction, if is found during the course of search, then they also evoke provisions of Black Money Act. Now, Black Money Act per se has come into effect from assessment year 16-17. The Black Money has two criteria. One is undisclosed foreign income of assessee of any previous year will be taxed at the rate of 30%. So any income which assessee has made post AY 16-17, that is liable to tax under Black Money Act. And the second criteria says that any foreign assets which comes to the notice of assessing officer, then the same will be taxed in the year in which that asset comes to the notice of the officer. So if a foreign investment is made by assessee, say in financial year 9-10, but that transaction during the course of search which has happened in financial year 18-19, if that property has first time come to the notice of the officer at that time, then though the investment is of financial year 9-10, but that will be taxed in assessment year 19-20 when the search happened, and it will be taxed at the rate of 30% of the fair market value of that asset as on that assessment year. So as far as income is concerned, the Act limits itself from going beyond AY 16-17. But if that income has been transformed in form of any asset, and if that asset is being discovered by the officer, then even though the investment is of year prior to 16-17, that asset still will be taxed under the Benami Act at the fair market value. Now, Benami properties, Black Money Act, you have the assessment happens in this section. Earlier 148 provided for reopening in case of foreign income for 16 years. But since Finance Act 21, that provision has been taken off. So now the assessment for black money, any foreign investments or foreign income will happen in Black Money Act itself. And from the end of the assessment order has to be passed, assessment order has to be passed within 2 years from the financial in which the notice for assessment has been given. So this is also one of the act which is very regularly now used by income tax authorities. If we look at the penalties for this act, then we have like when there is undisclosed income or undisclosed foreign assets being taxed, then the penalty is 3 times the amount of tax. This is quite a strict provision because it crosses the value of the asset, because 30% is what you pay tax and 3 times of that amount you pay the penalty. Then there are also penalties for non-disclosure. So now the return of incomes, the forms are becoming so elaborate, which ask assessee to fill in details of foreign investments, foreign assets, foreign bank accounts, which is a FA schedule in the ITR. So if anyone who has failed to disclose or have disclosed any inaccurate details in the return of income about the foreign investments or foreign income, then they have to pay 10 lakh rupees as the penalty, which is if that bank balance should not exceed 5 lakhs. If it is below 5, then there is no penalty. But if the bank balance is more than 5 lakhs in the foreign country, then you have to pay 10 lakh rupees as penalty. And if you have foreign income and you have failed to file your return, then also there is a penalty. So if in case of an individual in whose case a foreign income is being found, then he has to pay tax, pay 3 times of the tax as penalty, and also pay a penalty of 10 lakhs for non-filing. And if you are in a you are falling into a criteria where you have disclosed that asset, you have paid tax on that income, but there is a failure to disclose that asset in the FA schedule, or if that disclosure is incorrect, in that case there is only a penalty of 10 lakh rupees, and there will be no penalty for non-disclosure of income because that is already disclosed. Then there are certain other penalty in this section in this act, which is if there is a default in payment of tax, then amount equal to tax will be the penalty. And if you fail to answer the questions of the department, sign any statement or attend any proceedings or produce any books of accounts, then it is between 50,000 to 2 lakh rupees. So now we see a lot of cases where department is referring and sharing the information with other departments, as well as using this act to tax the undisclosed income, whether in India or outside India, whether in your name or not in your name. It is being covering from all the sides. Now, when we see after the search action is done, after the department, after the officers goes out of the premises of assessee, what next is there for investigation wing to do is that whatever data they have collected, they will analyze all the seized material, then the data that they have taken in the digital form, the statements that they have recorded from all the premises. They will do analysis of it. They will issue questionnaire to the assessee, asking them to explain certain transactions which they intend to. Have a look at the submission which assessee is making. If they feel that they need to do further investigation, then they might do a lot of survey on the parties who are connected to the search party to understand the nature of transaction from them. Or if they don't wish to do the survey, then they issue them summons, call the party, record their statement to understand the transaction or to confirm the concealment if they have found out from the other party as well. After analyzing all this data, department ascertains the concealed amount and also identifies the individual who have done the concealment. So they will identify the entities, the years in which there is concealment, and the amount of concealment. And after doing this exercise, they prepare a report, which is an internal report of department, which is never shared with the assessee. And that report in case of search is called the appraisal report, and in case of survey, it's a survey report. Then after doing this, they have 60 days to do this proceedings, but if there is, because of the voluminous data or many other factors, they have the provisions to seek for extension, and up to 6 months they get an extension to finish their appraisal report and pass it on to the officer. Now, once the assessors are identified in the appraisal report, what next they do is they write to the jurisdictional AO of all those assessors for centralization. Usually for the search and survey matters, they don't have different assessing officer. Even if there are 10 individuals involved in the search, the assessment will happen with the one officer. And why do they do this centralization? So that they can have a holistic picture and they can see the entire fund flow, where the fund is coming, where the funds are going. So to have that kind of view, they always centralize the cases with one officer and they do the assessment at that point itself. So they will send a centralization proposal from their PCIT to the PCIT of Central Circle. Then PCIT Central Circle will send the proposals to all the jurisdictional PCITs, and then the centralization process will happen. And then the centralized officer will be nominated, and investigation wing will forward all the seized material, the digital data, as Harsh was mentioning. When they take the digital data, they prepare 2 copies of it. One is the main file, second is the working copy. So working copy, main file, all the statements, everything, the appraisal report, everything, they then share it to the officer who is in Central Circle. So as we all are aware that now everything is faceless, all the assessment happens faceless, which happens into a different jurisdiction. AO assesses in one jurisdiction, the officer is in another jurisdiction. But as far as search and survey cases are concerned, they are still outside the purview of faceless assessment, because that involves there are a lot of complications in the search cases. It requires representation, it requires explanation of the seized material and everything, and which is not possible in the faceless scheme, and that is why that has been kept out of faceless, and that happens with the Central Circle officer. So now, earlier, search assessment used to happen there were particular sections which were governed, which used to do assessments, in which assessments for search proceedings used to happen, which is 153A and 153C. 153A usually used to happen for the assessees in whose name the warrants are issued, meaning thereby who are searched. So assessment used to happen in 153A. And if searches happen at my premises and certain documents pertaining to Harsh are found from that, then Harsh assessment used to be covered by 153C proceedings. But since Finance Act 21, these proceedings are taken away. All the search actions which are happening post 1/4/2021, all the assessment will happen under section 148, which are reassessment proceedings, which are the normal proceedings like the other 148 proceedings. Now, what is different in 148 proceedings for search matter and others are, in case of any reopening proceedings, the condition is that assessing officer should have information in his possession about concealment. But as far as search and survey cases are concerned, the section provides for deeming provision, meaning thereby, if there is a search and survey, there will be a deemed presumption that there is information available with the assessing officer, and he doesn't need to actually have any information other than the fact that search and survey actions have happened. But of course, it also triggers by the conditions of 149, wherein up to 3 years, if he wants to do assessment, he can reopen without any monetary limit. But beyond 3 years to 10 years, if any reassessment has to be done, given the fact that search has happened, but there should be a concealment of more than 50 lakh or 50 lakh rupees. And that concealment should be in form of an asset or an expenditure or entry in books of accounts. So Finance Act 21 brought in that concealment should be in form of an asset, and that has been amended by Finance Act 22 retrospectively to include asset, expenditure, and entry, all three into it. Now, a lot of question now, because these are very new provisions, but the question that comes up to us, like when we are doing search matter, is, for an example, if during the course of search, a notice are found for on money receipts for a builder, which is an income for the builder. But during the course of assessment, no cash is found, neither any asset is found, which is to be not disclosed by assessing. So whether that undisclosed income can be considered to be, an asset for it to be taxed, because the section doesn't provide for taxing any income. It says that income should be in form of either of the three. So there is a litigation around it, that whether if income is not supported by any asset, or if there are no noting of expenditure or not any entry in books of accounts, then whether that income needs to be taxed or no. Now, when we look at the assessments under 153A, for the searches which has happened prior to 31st March 21 are already being time barred. So we will not have any proceedings left for 153A post March 21, but those cases will be in appeals. Now, what are the difference in the earlier provisions of 153A and new 148 assessments are that earlier when search used to happen, it was mandatory that all 6 years preceding the year in which search has happened will be mandatorily assessed for any assessee. Even if there is any notice of income found or no, there was a mandatory assessment. Now it's a relief to an assessee that only if some concealment is found out by the officer, only then there will be a reassessment and not for all the years. So initially we used to see that in case of search when 10-15 parties, warrants are in name of 10-15 parties, then there used to be a lot of assessments. Some of them will be just procedure assessments because there would not be any income. But now that number will come down to only the years where there is concealment. Now what was there earlier, one aspect which was there was that in case of 6 years, which used to be mandatorily assessed by the assessing officer, if for some of the years assessments were earlier concluded either in 143.3 or 143.1 or 148 as the case may be, then for those years, those used to be called as non-abated years. For those years, nothing can be added to the assessment unless there is any incrementing material available for those years. So there are Bombay High Court decision in case of all cargo and in case of Continental Warehouse, which was upheld by Supreme Court also, stating that in case of assessment year where assessment proceedings are concluded, if there is no incrementing material, then you cannot do any addition. Of course, they have to do the assessment again, but you cannot make any addition. But now that has been taken away with 148 because 148 only condition is they will deem to have information if there is search, and the concealment as per them should be more than 50. Now that concealment not necessarily should come out of an incrementing material because that is not provided in 148. That increment can be beyond incrementing material also. That concealment can be beyond that amount also. So in that way, even the assessments which have reached finality earlier will again be reopened for the issues which are not even coming out from the incrementing material. Now, when we look at 148 provisions which are new, there is 148A provisions. Before giving notice for filing return under 148, 148A provisions are to be followed. But for such cases, even those provisions are not required to be followed. Assessing officer will be eligible to directly issue notice to the assessee to file the return under 148 and make the assessment. Once the notice is given to the assessee, then you file the return, then they will issue questionnaire which has to be replied and assessment orders are passed. And the time limits for passing assessment order is 12 months from the end of financial in which notice of reopening is served on the assessee. And if the case is referred to the transfer pricing officer, then the same will be extended by 12 months. This remains same for the reopening assessments, otherwise then through a search and pursuant to search both. Now, when we look at the tax rates and penalties which comes up with anything being found during the course of search. So if any income is found for which a source is available, then those kind of income will be taxed as per the applicable rates. For an example, if assessee is having an investment in a property which has been sold by the assessee, and 2 crore consideration assessee received, and assessee has offered that property as capital gains. Now during the search, if it is found that 3 crore rupees assessee has received in cash, then the source is identified, the sources of the same property which is belonging to assessee. So that 3 crore rupees will be taxed as source which is explained and will be taxed at the normal rate, that is long-term capital gain. Tax will be applicable to that property. In case any expenditures are found for which there is no source, if some expenditure notings are found to be done in cash, but there is no source that how did you earn that cash, if assessee is not able to prove that, then those kind of addition which are under 68 to 69D prior to assessment is 17-18 up to 16-17, they were taxed at flat 30%. You will not get any other slab benefit or to the 68 edition. And post 17-18, assessment is 17-18, they are taxed flat at the rate of 60%. No deduction or any expenditure will be allowable to the 68-69 edition. And post 16-17, a flat surcharge rate of 25% is applicable, whatever is the status of that entity. If the edition is made under 68-69, the surcharge is flat at the rate of 25%. Further to this, in Finance Act 22, the provision section 79A has been inserted, which provides for that if the addition is made on account of any search, then there is no brought forward losses or unreserved depreciation available in case of the assessee. So this is as far as income tax rates are concerned. Now, as Harsh was mentioning that since last few years, penalty provisions have become very wide, and the penalties are higher than the tax amounts. So if one has to look at this slide, initially prior to assessment of 17-18, there was concealment penalty, concealment of income under section 271(1)(c). That penalty was 100% of the tax evaded or maximum 300% of the tax evaded. Now this section has been replaced by section 270A and 271AA(c). Now even penalties are to be levied based on whether the source of that income is explained or source of that income is not explained. So in case of a 68-69 edition, the penalty will be under 271AA(c). The tax of 60% was under section 115 BBE, which is a specific section for taxing 68-69. Now the penalty under 271AA(c) is 10% of the tax amount, which is in under section 115 BBE. So on 60%, 10%, meaning thereby 6% on the income is the penalty for 68-69. As far as other additions are concerned, the penalties are very high, that is 200% of tax evasion. So if we look at this penalty provisions, these are very weirdly drafted to say that if you have undisclosed income with no source, you pay 60% tax, you pay higher tax in 115 BBE, but you pay only 6% penalty. So total tax plus penalty is 66% in case of 68-69. However, if you have an income which is from a source which is known, though you pay 30% tax, but you end up paying 200% penalty of the tax evaded. So here the penalties are very high as compared to the other way. I think some amendment should come into this, because I think the intention was always to tax and penalize unexplained source higher than an explained source. But as we see today, the condition, the penalties are higher for the disclosed source and lower for the undisclosed source. Then we have one more section which looks into specified years. The penalties for specified years will not be as per 270A or 271(1)(c) or 271AA(c). Now, what are specified years? Specified year is year in which search is conducted. That search year, we call it a search year. That search year will fall under the specified year criteria. And the year which has concluded just before the search year, assuming that search has happened in, say, today, June 22, then March 22, the year which is concluded just before the search, and the due date for filing return for that year has not lapsed. As we see for March 22 till date, there is no due date which has been time barred. Plus, the assessee should not have filed the return. If the case is that assessee has filed the return in May, then that year will not be a specified year. But if that assessee has not filed the return till date, then for the search which has happened today in June 22, March 22 means AY 22-23 will also become a specified year, and the search year, that is 23-24 AY, is also a specified year. So for the specified year, there is a penalty which is under section 271AA(b) and not in any other section. Now, what is 271AA(b)? 271AA(b) says that if the undisclosed income is admitted during the search action if assessee specifies the manner of earning and substantiates the manner of earning, and in the return, when the return is filed, declares that return and that declares that income and pays tax on it, then the penalty will be 30% of undisclosed income, vis-a-vis the 200% the other section. So if all these three criteria are fulfilled for the undisclosed income of a specified year, then the penalty is lower of 30% of undisclosed income. If any of this is not fulfilled, like in the search, during the search statement, this income is not owned up by the assessee, then the assessee has to pay 60% of undisclosed income as tax, which is same as section 270A, 200% of tax evaded. So for the search year, we have a specific section, which is 271EE. Other than this, there is this two sections wherein the penalties are too high. From assessment year 17-18, there is section 269 ST, which has come in force. 269 ST means you cannot receive from any person any cash above rupees 2 lakh from any person. If you receive cash in excess of 2 lakh, then there is contravention of section 269 ST, and penalty for that section will be levied under section 271DA. Prior to this, we had 269SS and 269T, which were taking into it ambit cash loan transactions. But now ST takes into consideration all the transactions other than cash loans, because they are governed by 269SS and T. So you cannot have any kind of receipt from anyone exceeding 2 lakh rupees. If that is the case, then there is penalty in 271 DDA of 100% of the amount received. So if one has to imagine, one has to pay first tax on that amount, then penalty on that amount, and then again penalty in this section, leaving by like 100 rupees is the income. One might end up paying 200 rupees or 180 rupees as the tax on that amount, tax, interest plus penalty. Now, since from assessment year 2021, there is one more section which has come in force, that is 271AA-D, which says that if any false entry is found to be recorded in books of accounts. Now, if to give you an example, I would say bogus purchase, accommodation loan transactions. So any this kind of transaction are found which is recorded in books of accounts but that are not correct, then also you have penalty of 100% of the aggregate amount of such entry. So in especially accommodation loans, accommodation purchases, all this will now trigger 271AA-D also, and one has to pay penalty in this section. So as now we see that tax, interest and penalty works out to be very high in case of not just search cases, even otherwise. But in case of search, where there is an involvement of a lot of seized material, a lot of things being found, so it has a very huge implication. And as Harsh was mentioning earlier, people had an option to go with a settlement commission. And when you go to settlement commission, you had an option to seek immunity from penalties, which will end up an assessee paying only tax and interest, which is now taken away from Finance Act 21. But let's see if that comes back. That will be a great help for the cases, especially which are searched. Now, in search, because the kind of transactions are found are in cash and outside the books of accounts, there are a lot of issues which come up as to how are this transaction to be taxed. So some of this we are trying to cover today. So one of the issue comes up is source and application. How do you generate that income? An application is when you use that income and if notings are found about the usage. So I have just put down two scenarios in this case. Assuming in case of scenario 1, where notings are found for cash sales of 1 crore rupees in April 22 and cash paid for purchase of property of 50 lakh in month of May 22. So one may think that in this case, what is to be taxed, whether 1 crore, whether 150 lakhs, whether 1.5. In this case, arguments can be taken before the assessing officer that because the source is available, once cash sale of 1 crore is being taxed by the assessing officer, then we can request, we can make a prayer of not adding the purchase of property of 50 lakh, which is purchased from the same cash which has been generated in form of cash sales. Now here one also have to look into the time of transaction. Now in this case, we may see that cash sale is prior to the expenditure, then we can take the benefit of taxing only source and not application. But if the timing are not matching, then officer will end up adding both the things. Now in case of scenario 2, where source is not found, only noting is found with regards to purchase of property of 50 lakhs in month of May. In this case, 50 lakhs will be added, and it will be added as a 69 addition, and it will be taxed at the rate of 60% because the source is not found in this case. It's an unexplained investment of assessee. So if source application both are found, then a prayer can be made to the assessing officer to tax only the source and not the application. One aspect which also comes during the course of search is extrapolation of income. There could be extrapolation of expenses also. So what is extrapolation of income? For an example, we have put down that suppose there is a project of 5 commercial shops which are constructed, completed and sold by the assessee. Now in the seized material, notings are found for 3 shops, wherein it is mentioned that 40% of consideration is received in cash and 60% is by check. Now whatever is received in check, assessee has offered, 40% of cash is not been offered for 3 shops. Now, in this case, a lot of time we see that assessing officer does not restrict himself to tax only 40% of 3 shops which are found, but he also extrapolates the same 40% for the balance 2 shops, saying that if the property is in the same locality, if it's the same project, then it's unbelievable that something you will sell for 40% cash and other 2 you will not. So they do extrapolate the sales, and then they tax 40% for all the 5 shops. One more example of extrapolation is assuming notings are found for assessee, wherein as per regular books of account, assessee is having drawings of 20 lakhs. But there are instances found where year on year, the drawings, cash drawings of assessee outside the books of accounts is say 1 crore. That's the lifestyle of an assessee, that every year 1 crore is the drawings. Then if assessment has to be done, then assessing officer do extrapolate the drawings and ascertain that the drawings which are disclosed in the books of accounts are not adequate, looking at the lifestyle of the assessee for the other years for which notings are found. They extrapolate the same for the other years as well. So this is one concept which comes up in the during the course of search. The other thing that comes up is, how do you tax undisclosed income? Whether the same treatment is given to the undisclosed income as that of a disclosed income. So we have given 2 examples here. In example 1, property is sold in June 2018 and sale consideration received in check is 75 lakh. Now in the seized material, notings of consideration received in cash of 50 lakh is found. Assuming the purchase cost of property was 1 lakh 10 years back, and index cost of that property is 5 lakhs. And assessee has offered capital gains of 70 lakh, which is 75 lakhs check minus 5 lakhs index cost. So 70 lakhs capital gain has been offered by assessee. So now what treatment do we give to the 50 lakh cash found for the said property? Here the argument can be taken that undisclosed income should be given the same treatment as the disclosed portion, that 50 lakhs should also be considered to be the sale consideration over and above 75, and 50 lakhs should also be taxed as the capital gain income of the assessee. Scenario 2, where notings are found with regards to on money received for cash of a builder who is into the business of real estate. If on money receipts are found for the sale of shops, then how do you tax this on money? One may say that it has to be taxed as a business income of assessee and not any undisclosed source, because that's the business. And then the income will be taxed as per the business income with regards to the on money receipts. One may also argue in this case saying that like assuming for the first year, where I think that we have covered in the next slide, that is the taxability of income, like in the sale for property, in which only 10% of the project was completed, and in the next 2 years assessee has offered 60% and 40% of the project, then one may argue that the year in which the noting is found, it was only in the nature of advances and not income. Thereby, the same should not be taxed in assessment in 1920, but the same should be taxed in assessment in 1920 and 2021, following the same method of accounting which is followed in the regular books of accounts and offered in ROI. What will happen in this case is assessee will save on interest, because if that on money is taxed in assessment year 18-19, the tax rate will still remain same, but because it is being taxed to the earlier year, the interest burden on assessee will be too high. But when that has been shifted to 19-20 and 21% to the extent of 60% and then 40%, that will help assessee save a lot of interest when one argues on year of taxability. Other than that, we have come across that a lot of times notings are found for incomes also and expenditure also. Like in this example, cash sale of 20 crore and cash expenses of 15 crores are found. Whether one can take an argument here that expenditure should be allowed to the assessee, the answer is there are a lot of decision in favor of assessee, wherein a lot of courts and tribunals have held that what needs to be taxed is the real income out of the undisclosed transaction and not the entire transaction. When there are clear evidence of assessee doing sales of 20 and expenses of 15, thereby earning only 5 crore out of this entire transaction, then taxing the entire 20 crore is not correct. So this kind of decisions are there in case of Mehru and Irani, Kishore Mohanlal Telwala, which is of Ahmedabad Tribunal, and Panna Corporation of Gujarat High Court. But nowadays, we also see that department takes an argument that 48(3) triggers in case of cash expenses, that because these expenses are incurred in cash, they should not, meaning thereby you tax 5 crores as the profit out of this, but you disallow the 5 crore of expenditure because it's under 48(3). Then one may have to look into the factual aspects of this expenditure. There are a lot of courts which have held that whether it can be proved that this expenditure is made to a single person exceeding 20,000. So if there are notings, clear notings of payments is made to which party on what date of what amount, and if that amount is exceeding 20,000, then 48(3) will trigger. But if there is no description of party to whom payments are made, no description of dates, how much amount, then one may argue that there are no evidences found of these expenses to be to one person exceeding 20,000. The same thing had happened in case of Lodha Builders when they went to Settlement Commission, and in Settlement Commission had taxed their had a certain 22% to be the profit of the assessee. However, department went to the High Court stating that the rest portion, the rest percentage what they have been considered to be the cash expenditure is triggered by 48(3). But in that case, Bombay High Court held the same thing, that if there were no traces found in the incrementing material which proved that payment is made to a single person exceeding 20,000 on a single date, and therefore this disallowance doesn't trigger. So now we have to really look into the seized material to ascertain whether that provision is being triggered or that is not triggered. Now there are some other aspects which comes across. One of very interesting aspect is telescoping of income. Earlier, when Settlement Commission was there, assessee, when income and expenditure are found in case of different assessee, one person used to own up all the transaction. They used to prepare a master cash flow wherein all the incomes were taken into consideration, all the expenses were taken into consideration, all the inflows, outflows were recorded, and the income which was being generated out of that cash flow was offered before the Settlement Commission. But now, because Settlement Commission is not there, so telescoping of entire group being different individual is not possible. But one may always try and prepare a cash flow on individual basis taking into consideration all the inflows, all the outflows, all the income, all the expenditure, and determining income based on the individual cash flows. That will always help in saving tax, or rather ascertaining the real involvement of cash in the transaction rather than taxing each item individually. So this is also one of the aspects which really comes into play in case of search transactions, when there are n number of notings found of cash coming in, cash going out, different type of transaction, be it accommodation, purchase, sale, unexplained investments. So everything has been put up into cash flow, and we find out the income. Nowadays, we also see that once income tax department finds out that this undisclosed income, then they pass that information to GST department. Because once the income is not offered to income tax, not disclosed in the regular books of accounts, means GST has been not paid. Then we see a lot of, after search, we have seen there is GST search, GST survey. They also scrutinize transactions from Money Laundering Act and a lot of other acts. So there is exchange of information between various departments nowadays, and these are all things which one may keep into consideration when there is search. One has to evaluate transaction not only just from the angle of income tax, but from the angle of all the other acts. And whenever a strategy is made to represent the case before assessing officer, that strategy has to be evaluated from all the angles and from all the acts. So this is, I think, what we have today. And if there is any questions, we would like to take. Harsh, if you want to add something to this.
No, nothing for me to add. Good. If there are any questions, happy to.
Yeah.
So thank you very much, ma'am. Both of your presentations and the explanation for the content was really very intriguing, as in we could connect to it, and those who do not really have so much of exposure to search and seizure could understand the concepts very clearly. And as you said on the closing note that, you know, nowadays it's like income tax and GST are getting working hand in hand. So it is rather better to have a better insight of what should be done and what should not be done, and the gray areas. So starting with the queries session, you have rightly said, sir, but still, if there are any checkpoints as to, can the survey proceedings be converted into search? So what could all be the possible scenarios wherein the survey can be converted to search? If you can enlighten us again.
Yeah, so usually, basically, there is a guideline that if there is a significant amount of cash which is found during survey proceedings, then it can be converted to a search. There is no clear guideline. There was a 2003 CBDT circular which said that if you find more than 10 lakh rupees cash, but that is not being followed, because 10 lakhs in this day and age is a very small amount for search and seizure operations. So for each region, they have a different criteria, and if they believe that significant amount of cash is found, if they believe that they will need to cover residential premises, they will need to extend the scope of inquiry, then they take an authorization and get a satisfaction note prepared and convert it from a survey into a search operation.
Okay. So is there what we can say, Jadu ka chhadi, wherein the precautions we can take that, you know, the survey wouldn't be converted to the search? If you can give us some tips for that.
Yeah, I don't think much we can do in terms of the conversion. I think what we can do is, for assessees or clients, for us, we should tell them to, obviously, best case scenario, not conduct any thing which has any unaccounted transactions, but also not deal with individuals with individuals who basically are, say, blacklisted by GST authorities, work with shell companies who have been, maybe they may be genuine transactions as well. So all these now gets flagged in the system, And all this kind of leads to any of the investigation wing officers deciding that there should be a survey of the search action.
Sir, what are the human rights of party during the search proceedings?
Yeah, so human rights are, I think, see, one is that they are not allowed to use any force on you. They are also basically they are supposed to give you regular breaks. You can have your meals, not necessarily on time, but they should be able to give you meals on sufficient rest. In between, suppose statement is going on, because sometimes statements goes on for the entire day. They are not supposed to take the statement till late night. They're supposed to conclude at a reasonable amount of time and then give sufficient rest for the person who's giving the statement to continue the statement the next day. Basically, there should not be any pressure from the authorities. Practically, there could be other scenarios where there could be pressure, but they are not supposed to put pressure. And what we would suggest would be that as long as the person giving the statement doesn't lose his cool, he should be able to answer, and whatever he knows, he should answer. Whatever he doesn't know, he can always say that this is something which I will need to study my books of accounts and give an answer, after I have studied it. So he should not say something which he does not know or he doesn't believe to be true, just because of a kind of pressure situation which is created.
I would just like to add a few things in this. The SSC also has right to any medical help if there is need. You can always flag it to the conducting DDIT or the DDIT on the premises if there is any medical emergency. It is a right of assessee to look into the Panchnama and all the documents before signing. He should read all the statements before he signs. He can look at everything that has been seized. All the pages are initialed and signed. So it is his right to look into what is being seized, look into the Panchnamas, look into the inventory. And it is advisable for the assessee to not to sign any documents during the course of search without reading it. Because if then you cannot take a course of saying that I was not in the right frame, I did not read the document. So that's a right as well as a duty of an assessee to read everything before a sign is put by the assessee on it.
Okay. Ma'am, now that we're talking about the Panchanama, it is usually observed that once the statement is given, okay, when the person asks for the statement, they say usually that you should come after 2 to 3 days. It is not given to the person immediately. So is there any written provision for the same, that it cannot be given on the same day, or if there is any provision that you can rightfully demand it at the same time? Is there any kind of a provision for the same?
You can very well demand for it at the very same time, but for the administrative purpose, they have a lot of stamping to be done, a lot of things to be attached to it. So they usually don't give on the day of search. But what is important is that you read the Panchnama in whatever form it is at that time, and then you ask for it at a later date, and then they will serve upon you the copy. But Panchnama is something that usually they give it to you on the day of search. I understand that statements are something which they give on the later date, but Panchnama is the copy which is the right of assessee and which is most of the time given at the time of search to the assessee on the day of search itself.
Okay. Ma'am, like one more question for both of you. Can the statement recorded in search can be retracted, and will addition on the basis of statement sustain?
Sorry, can you repeat that question?
So whether the statement recorded during the search can be treated as retraction, and on the basis of that statement, if there is any addition to the income, will that sustain?
Yeah, so I had mentioned that a recent Kerala High Court decision on this issue. So the thing is that basically the retraction is valid. So retraction is valid. Definitely, you have all the right to retract whatever statement you have given during the course of search. But most courts have upheld that basically how fast you do the retraction. If you do it after a long period of time, then it loses the evidentiary value. Secondly, how are you retracting it? Are you just saying that I'm just doing a blind retraction by saying that, oh no, I was, that there was a lot of pressure and coercion, etc., and I'm retracting it? Or are you retracting it with any proper reasons? That this is the reason I said X, and now I'm saying Y, because now I've had time to look at my books of accounts, I've studied this, that, etc., and this is why. So it depends on the facts of the situation. A general retraction without any basis or without any clear reasons would usually not fly.
Okay. Thank you very much, sir. And thank you very much, ma'am, for your deliberation and taking out time for our members. Hence, now I request our secretary, Nagpur branch of Picasa, Nagpur branch, CA Akshay Gulani, to propose a formal vote of thanks. Akshay, you're not audible.
Hello.
Yes, now you're audible, Akshay.
Thank you so much, Swarupa. Basically, it was indeed a very interactive session. Thank you so much, both the speakers. I personally thank CA Makarand Joshi sir, past Vice Chairman WIRC, for sparing his valuable time. I also thank both the speakers from Mumbai, CA Bhuta sir and CA Sneha Padhiar ma'am, for giving very valuable inputs and guiding the audience. Thank you so much. Last but not the least, thank you all the participants for sparing their valuable time till the end. Definitely, this is a very specific subject, and giving justice to this subject is really remarkable. Thank you so much. Over to you, sir.
Thank you once again. I thank you all on behalf of all our participants over here, and we wish to have you for a few more sessions in the Direct Tax series. Hoping to see you soon. Thank you very much.
Thank you.
Thank you.